Hey friends, it's PK Patel from Midwest Corporate Credit, where funding your business is our business. My real estate investor friends, let me ask you this. Do you like to make money during your sleep? Do you ever go downtown, look up, and wonder why the tallest, most expensive, most beautiful glass buildings belong to banks? Well, I'm going to share all of that with you, and I'm going to show you the exact strategy that the banks use in order to make all that money to afford all those skyscrapers. Make sure you watch the entire video and pay close attention. This is going to blow your mind. The technical term for the strategy that I'm going to share with you today is called arbitrage. All arbitrage is being able to make a higher return on money that doesn't belong to you in the first place. If you think about it, that's all banks do. You walk in through the front door, you drop a deposit in your checking or savings account, they pay you maybe little or no interest at all. They might pay you 0.5%, and then they're lending it out on the back end, doing mortgages, business loans, car loans at anywhere from 4 to 7%. That's exactly what I'm going to show you how to do today. So here's how it works. The first step is to set up a business credit card that's going to give you a large limit. And I've done this for many years, and I didn't start off with a large limit. Actually, they gave me a very small limit when I first started several years ago. However, over the years, I've been able to increase my limit and get it up to $75,000 on this one single account. So here's how it works. I got this business credit card at $75,000 limit, and then what I did was I used a balance transfer check like this one, and I was able to draw the money. And here's the cost of the money. It cost me 2% fee to draw the money, and they were giving me a 0% interest rate for 16 months, right? So 0% for 16 months, 2% fee. That's actually pretty cheap money. And then here's the magic. What I did with it was I lent this out as a hard money lender. As a matter of fact, I got the paperwork right here. All right, here's the mortgage. And I lent out the entire $75,000 to a real estate investor that's local here. And this is a market that I know. It's a market that I'm comfortable with. So I like the property that he was actually going to invest the money into and let me collateralize. And in exchange, I got a first position mortgage, right? All the documents are recorded. So it's just like a bank officially offering you a mortgage and leaning that property, which is what I did to him. And here's the property. It's $125,000 as is value. This gentleman paid $100,000 for this property and put $25,000 in exterior repairs so far. And then he just ran out of money to finish the rest of the project. So I agreed to lend him the $75,000 based on a 75% LTV of what he paid for it. All right, so let's do a side-by-side comparison of what it cost me for my money. We already determined $75,000, 2% to draw, and 0% interest for 16 months. And based on this mortgage, here are the terms that I assigned to the borrower. $75,000, right? And charging him a 3% fee, which comes out to $2,250. Charging him a 14% interest for a 6-month term. All right, so let's do the math and calculate the profits on that. 6 months, the fee that I'm charging him is $2,250, 3%. The fee that the bank is charging me is 2%, which is $1,500. So I profit $750 there. And then remember, I get a 0% interest for 16 months. So that means all the interest that this guy pays me is all 100% profit. The interest that he's going to pay me over a 6-month period is $10,500. So on this one deal, I'm going to make $11,250, and I never had to find the property, and I never have to worry about contractors. I never have to worry about getting permits, dealing with inspectors. I just basically sit here in my office and wait for him to finish the project and pay me off. And in the meantime, I'm collecting monthly payments. So it's actually an awesome strategy. Now, what happens if this gentleman finishes the project and pays me off? Let's say 6 months later he finishes the project and pays me off. I'm able to do it again. So my job at that point becomes not to pay back my credit card company, because keep in mind, I paid a 2% draw fee and I have the money at 0% interest for 16 months. So now we still have 10 months left. So my job then becomes to go out and find a second deal that I could fund real quick, because I could increase my profits even more. And my job is to keep the money out there and keep it revolving. So let's see what happens if I find another deal, let's say a month later, that I'm able to fund. Here's what happens. Remember, this time I'm not paying the 2% draw fee because I already paid it on the first part of it. So this time, the entire 3% fee that I charge to the borrower, it all becomes profit. So that's $2,250 in fee profit. Then I have $10,500 for the same 6-month contract. And now my profit on deal number 2 that year becomes $12,750. All right. If you add that to deal number 1, which is $11,250, that becomes a $24,000 annual profit on just doing these 2 deals based on just this one account for $75,000. So there are some risks to this strategy, and I'm going to explain them. All right, so the first thing is, what if the 6 months pass and the borrower doesn't pay you back and it takes longer? So in my mortgage, I've actually got a clause that's built in that if it exceeds 6 months, then the borrower has to pay me another 2, 3, or 4%, which is an extension fee, and I'll extend it out another 6 months. To be honest with you, this is a great thing. If this happens, then you already got your second loan lined up and ready to go. Now, the next thing is, what if he doesn't repay at all? Well, then you have the rights to take back that property. I mean, then you end up with a property that's worth $125,000, and after legal costs, you might almost double your money. So that's actually happened to me once. So it's actually not that bad. Usually issues get resolved, and I've done hundreds of these deals. Typically, if someone's a little bit behind and they're not able to repay, then they liquidate the property, or you go through arbitration and you resolve the issue and you settle it out. Either way, you're going to make your money, even if they don't pay, because you have the property itself attached as a collateral, and you don't really care whether they finish the project or not. You want them to finish it, and you want them to do well, and you want them to prosper, and you want them to make a massive profit so they could move on to their next deal and borrow from you again. However, sometimes things do go wrong. Now, the third thing is, what if the house burns down? Well, what you have to do is, before you disperse the money, before the closing on the $75,000, you have to have the borrower add you on as a mortgagee. So basically, you're pretty much taking the bank's position. And if you don't have hazard insurance on your property, the bank will definitely get on your case if you have a mortgage on your own house. Same way, the insurance company is going to then notify you if this policy lapses, or if the borrower cancels the policy, or if there's anything wrong with it. Even if he makes a change, let's say he insured it for $125,000, and now all of a sudden he's being a cheapskate and he drops it in order to save on premiums. He says, well, I'm only going to cover it for $100,000. You will get a notice as a mortgagee, and you could then get on this case and say, well, explain this. In this example, I'd still be covered because I'm only owed a $75,000 note back. So it's an excellent strategy. Now, you can't really live off of $24,000 a month. I mean, or $24,000 on an annual basis. Let's say you nail everything, you do these 2 deals perfectly, line them up back to back, $24,000 is all you have at the end of the year. You can't really live on that. So how do you scale the strategy up? Well, it's real easy. All you have to do is get 10 of these accounts and get them up to $75,000. And that's what we help our clients do, is we set them up with accounts that we know are going to be able to grow over time, so that our clients have more funding available as time goes on, and they're able to do more with it and leverage more. So here's what happens. Let's say you have 10 accounts. Now you have $750,000 available to you. What you're able to do is you're able to do 10 deals like this. And now I'm not gonna paint this rosy picture for you and say, well, now we're just gonna tenfold it and you're gonna make $240,000 a year. That's not how this works. You're gonna have a little bit of a drag, okay, downtime, just like you have vacancy in an apartment building. On paper, yeah, you should make X amount of money, but after vacancy, you're going to make less than that. So we'll just budget in maybe a 50% drag, 50% vacancy, so to speak, on your $750,000. Because when you take anything to scale, the drag is going to increase. And I know that from experience. So let's just say you only make half the money when you have tenfold to work with. You're still making $120,000 not doing anything without ever dealing with tenants, toilets, or termites. You never go to get a single maintenance call, and that is why I absolutely love this strategy. So you're probably wondering, how can you get involved with something like this? Well, it's real easy. The first thing you have to do is go through our program and get these types of accounts set up so that you're able to get the money in the first place so that you could lend it out. Now, the key is to get accounts that are not going to report to your personal credit, so that when you draw on them, your personal credit won't get hurt. And you have to kind of know which banks to go to, which we do for our clients in exchange for a fee. We can also give our clients a copy of all of these documents, and I'd love to give them to all of our viewers. However, these are state specific, and we're not attorneys, so we're not able to put all the legal language in there. You still have to get these signed off on by your legal counsel in your respective states. There's certain states that are mortgage states, that are certain states that are deed of trust states. I've been doing this for a while, so I've kind of learned what's what, and that's general information that you could probably look up on Google. However, the technical side of how to originate a mortgage properly is something that you need to be aware of. So, and it's not that hard. I mean, doing a real estate rehab is much, much harder than just writing a check and then collateralizing the property. So, and if you take it to scale, it could be just as lucrative, if not more, because now you're not dealing with 10 different headaches. You're not, like I said, you're not dealing with any of the problems that go with doing a real estate deal. You're just the funding partner. So basically, we've taken this to scale, and we've actually helped a lot of clients get started. And it's this is something that you could do. Now, you're probably wondering, well, what if I'm an actual real estate investor and I don't want to just make $10,000, $11,000 per deal? Well, that's fine too. If you have a pipeline of deals where you're able to make a bunch of money like my borrower did, then you could probably just use the funds to fund your own deals. You don't really need the strategy. So in either case, the first step is to get started with us. And the way you do that is you go to applymidwest.com and you click on the green button in the upper right hand corner, and you just submit a form. We'll do a free consultation, and if you like what you hear, you move forward with us, and we'll set these accounts up so that you could start becoming the bank yourself, or you could start flipping properties yourself, whatever you want to do. Or if you're a business owner, then you could purchase equipment, you could scale your business, do some more marketing, whatever you need to do to grow and experience arbitrage for yourself. All right. One thing you could do is, if you enjoy this video, share it with a friend. Don't be shy. And also, give me a thumbs up, give me a like if you like it, and make sure you subscribe while you're here. Subscribe to our channel so that anytime I do a video like this, you get an update. Okay, hit the bell and subscribe. All right, but for now, go to midwestcorporatecredit.com or applymidwest.com, which is the short form of it. Apply Midwest, we'll put the link in the description, and take a look, get started with us, and we look forward to helping you prosper just like this. All right, thank you for watching. See ya.